Hey, it's Martin Atencio, broker and owner of Bear Flag Realty and Company. Want to come to you real quick with a housing update. Right now, housing has been interesting. So if by definition we were looking at what equals a recession, we could say that housing is in a recession. And what that means is we are seeing a decline throughout the industry. So for example, right now, because rates have risen so quickly, we are seeing that values are having pressure and are starting to decline month over month. So that creates part of that concept. But furthermore, in the industry, particularly in the mortgage side of the industry, we are seeing a decline in jobs. And so we're seeing a lot of support staff and loan officers and those types of individuals beginning to be displaced because the volume has decreased in such a drastic manner that these companies, particularly larger companies, are having to reduce their staff levels to remain profitable and still be able to operate. In theory, we are in a small housing recession. So what does this mean for you as a homeowner? As a homeowner, right now, statistics in the Sacramento region are showing in most of the primary counties, so we're talking Placer, El Dorado, Sacramento, that we are getting back to the end of 2021 housing values. So that means we have seen an increase in 2022, and that increase is starting to be diminished as more transactions are closing at lower dollar amounts. And we're now north of 50% of price reductions for homes that have listed previously and are having to bring their prices down to find where the buyers are willing to purchase that home or where it makes sense for the buyers. Where did this all stem from? Of course, it all started with the inflationary rate that we are experiencing in our economy, and the feds have really buckled down to say we need to bring this back down to 2%. And until that happens, it's going to be painful. They want to inflict pain, and they believe that by lowering the inflation, it's going to be better for all. But in order to get there, we're going to see some pain and suffering. So the one thing that's in the economy that's staying strong is the job market. We're seeing wage growth continue to rise, jobs are secure. But the other thing that we have that's much different in this particular housing recession that's different from previous is we've got a lot of homeowners that are sitting with a lot of equity in their homes still. We're seeing them sitting at very low interest rates, and credit defaults are at an all-time low. So if you're looking for a big housing burst or a big housing bubble, until we see credit defaults take a different direction, what we think is going to happen is that people are going to remain in their homes. So if you're looking or in the market to buy, it's probably because you're looking to be a first-time home buyer. Makes great sense to do that. It might be because you're relocating, need more square footage, want to enter into a different neighborhood, maybe for a school system. Those are all good reasons to buy in this market. If you're a seller, might be the same thing. Relocating could be because of the cause of death. It could be because of divorce, those types of things. And we could still position your property to do well. And it's coming to the market, knowing where the market's headed, how you can best position your property, and that's where we can help you. So we're Bear Flag Realty and Company. We do real estate sales, we do home loans, and we're going to be launching property management soon. If you've got questions about your specific scenario, don't hesitate to reach out. We'd love to hear from you. Big questions, small questions, no question is too small for us. Talk soon.